What is good, YouTube? Charon FX back. Hey man, listen. So in this video, I'm about to break down how I was able to catch about 300 pips on GBP AUD using two entry strategies. Alright, so if you really want to learn how I did it, make sure you stick to the end of this video. If you're also interested in enrolling my one-on-one mentorship, just DM me on Instagram at Charon FX. If you also haven't yet subscribed to this channel, make sure you hit that subscribe button. Make sure you hit that like button. Make sure to drop a comment down below. So with that being said, let's just get to business. Alright, so now starting from the 4H time frame, what was the first thing I did? The first thing I did was to identify the trend of the market. Alright, the first thing I did was to identify the trend of the market. And looking at the market or looking at the chart, what trend are we in? We're in an uptrend. Alright, so after I've identified my trend, what was the second thing I did? The second thing I did was to identify my market structures. I repeat, the second thing I did was to identify my market structures. Alright, so now let's identify our market structures together. So now started from here, what the price do here, price created what? A lower high, came back down to create a lower low, came back to create what? A high, a low, a high, a higher low, a higher high. Why am I saying this is a higher low? Because this higher low led to the formation of what? This higher high. You get me? So at this point, the market is no longer bearish. The market is bullish. Someone might also say the market was consolidating right here, which is also right. The market was consolidating, right? Good. So after price created this higher high, what did it do next? It came back down to create a higher low. Why is this a higher low? Because this low is higher than what? That of its previous low. So now this becomes our new higher low. So after price created this higher high, what were we expecting price to do? We're expecting price to what? Create a new higher low. You get me? After this higher low is created, what are we also expecting price to do? To create what? A new higher high, higher low, higher high, higher low, so on and so forth. You get what I mean? Good. So after price created this higher high, what were we expecting? We're expecting price to come back down to create a new higher low. But where is that higher low going to be formed? That's where our third point comes in. So the third thing we did was to identify what our key level. So since price is giving us a series of higher highs and higher lows, what key levels are we looking for? We are looking for resistance to become a support. So remember, in a bullish structure, we are looking for what? Resistance to become what? Support. And in a bearish structure, we are looking for what? Support to become what? Resistance. So here, what resistance are we looking for? Right here, our previous higher high is what? Is served as a what? As a resistance. You get me? So now our previous higher high becomes our resistance, which you are waiting for it to be retested as a support. You get me? So that price can push back up. Alright? If you're a swing trader, this can be your entry. After price retested and created this bullish pin bar, you could have entered right here. You get me? And you could have targeted any of the previous market structures. Right? You could have targeted this resistance as your take profit. You get me? For the swing traders, but this is not how I took my entries. So for me, when it comes to entries, I like to go down to the lower time frame, which is my H1 time frame, to look for my entries. Alright? So now let's go down to the lower time frame, or let's go down to our H1 time frame to look for our entries. Alright, so coming down to our H1 time frames, this one I need you all to pay maximum attention. Alright? The first thing we did was to make sure that our H1 market structures is also the same as our 4H market structures. Remember, the 4H market structures was giving us what? bullish market structure. So we make sure the H1 market structures was also giving us bullish market structure. So let's identify our H1 market structure. So you have this higher low, a higher high, a low, a high, a low, a high, a higher low, and a higher high. All right, so on the H1, this higher low led to the formation of this higher high. You get me? So now we've also identified that H1 is also bullish, not bearish. So after we've identified our H1 market structures, now we are waiting for a confirmation after price retested this 4H key level, which is a resistance as a support, right? So what did price do? Price came up, came down, didn't retest. This wasn't the retest we needed. We needed price to come back into that level, then look for our entries. So when price came here, it went back up, broke below our resistance level. That's not what we are looking for. We want price to tap into our resistance level, right? Give us a confirmation, then we look for our buys. But then price broke below it, came back up, tapped in. So after price tapped in, right, after we got our retest on our key level, what did price do next? Or what were we looking for next? We were looking for what? A confirmation candlestick to tell us that price is going to go to the upside. So the candlestick confirmation that I had was what? Was this two bullish candlesticks. Why did I go in for longs on these two bullish candlesticks? Because if we add the volume of this bullish candlestick and this bullish candlestick, we realize that the volumes of these two bullish candlesticks engulf this bearish candlesticks. So after we had this confirmation, that's when we entered our trade. This is how we got our first entry. Alright, our stop loss right below this structure, and I'll take profit to our H4, structures. Right? So now do you get our first entry? How we got our first entry? Good. So after we got our first entry, how did you get our second entry? Now, take a close look at price. Can you see a chart pattern being formed? Yes, we can see an inverse head and shoulder chart pattern being formed. So now we have what? A left shoulder being formed here, a head being formed, and a what? And a right shoulder being formed. So how did we get our second entry? We got our second entry when price was able to break above the neckline of our inverse head and shoulder chart pattern. Now take a look at the breakout of our neckline. Take a look at the candlestick that broke out of the neckline. A Miraboso candlestick. Full volume closure of the candlestick. So now after price closed like this, that's when we went in for our second entry. Alright. So we entered right here and placed our stop loss right below our right shoulder. And I'll take profit also to our H4 structure. Alright. Yeah, so now that's how I was able to catch over 300 pips using two entry strategies. Alright. So in case you didn't understand anything, please go back and rewatch the videos over and over again to understand. If you're also interested in catching moves like this, just DM me on Instagram to get yourself enrolled in my one-on-one mentorship. Alright? If you're also interested in catching moves like this, just DM me on Instagram to get yourself enrolled in my one-on-one mentorship. If you also haven't yet subscribed to this channel, make sure you hit that subscribe button, make sure you hit that like button, make sure to drop a comment down below. So with that being said, I'll see you in the next video. Ciao and FX. Peace. I'm out.